Tuesday, December 25th, 2018, Maneco 64, home of alternative economics and contrarian views. That's the nice thing about doing videos on YouTube from home, is it doesn't matter if it's Christmas or Sunday or Monday or whatever. I just go along with my thoughts. And yeah, we are going out for a Christmas lunch later on today. My wife and my daughter went to pick up my mother-in-law, so Billy and I are on our own. So I want to talk about the debt and why everything else is a distraction, in my opinion. Of course, we do follow the markets, we do follow the currencies, but I just want to reiterate and give you some data about debt and why it is the great problem and why I think the Federal Reserve is reining in their monetary policy, because they know themselves debt cannot keep growing forever. It needs to rebalance, or else people lose confidence in the system, right? Is the Federal Reserve, are they going to succeed in fixing things? I don't know. Right now, it doesn't look very good. I saw what the markets did yesterday. When I did my video yesterday morning, the Dow was actually up 100 points, but it finished down quite a bit on the day yesterday, 653 points. And that was just a half day of trading. So you can imagine, well, maybe if it had been open the whole day, it could have rebounded, but it could have gone lower. So, yeah, the debt. And I like to look as well today at the history of the U.S. I will focus on the U.S., even though I'm in the U.K., because the dollar is still the major reserve currency of the world. I will talk about the price of gold in pounds and in dollars, and I've just looked at it in the last 3 years, what it's done. I know we're not exactly at the end of the year right now, but it will give you an idea and why it's important to have precious metals. And maybe, you know, years ago when I started buying gold and silver, 2002, I was still learning about gold, precious metals in the monetary system. I thought more of it as a way to make money, but then over the years, the more I learned about money in the monetary system, I realized that gold and silver are just like very sound currencies. They will not make you rich unless you leverage yourself, which defeats the purpose of having gold and silver, right? Unless you buy mining shares or mining stocks, which is a different proposition. I would say you need to look at it more as insurance. For thousands of years, it's maintained its purchasing power, and it's doing what it says on the tin, in my opinion. So I'll look at that a little later before looking at the debt, because I think that's the whole problem. And I'm only looking at the official debt because we know there's a lot of talk, especially Greg Hunter talks a lot about the missing 21 trillion. So we're not even looking at that. I'm just looking at the current debt in the U.S. As you can see here from the U.S. debt clock, it gives me a headache looking at this, how it moves. The U.S. national debt is almost 22 trillion there, top left-hand side, 21,895 billion, or 21.895 trillion. And then you can see that the gross debt to GDP ratio is 105.23. So you would think after the '08 crisis and the economy is recovering and it's doing great, as many people out there are saying, you'd think that things would be a lot better than they were in 2008. And the great thing about this usdatclock.org is that you can go back in time and you can look at today, 10 years ago, Christmas Day in '08. Well, the U.S. national debt was half of what it is today, 11 trillion. A little less than half, but let's round it up, right? So 11 trillion. And then I think this is the key ratio here that you need to focus on is the gross debt to GDP ratio. That was 78%. So we've almost gone up, 30%, 30 percentage points from that day, even though our economy or the US economy, the world economy is supposed to recover and be doing really well. Does it really justify the elevated levels for financial assets like stocks and bonds? No. And that's why we're seeing, what we're seeing now in the stock market. It's just the wealth that's been created, it's all based on debt, as you can see. It wasn't based on real investments, real savings. Of course, there are investments that have been real in the last 10 years, but a lot of them are malinvestments, as the Austrian School of Economics talks about. The other thing I wanted to look at is to show you how the Federal Reserve has been an instrument of debt. It's a debt machine that's not really looking after the interests of the American people. Yeah, their mission is to keep full employment and price stability, but I'm sorry, their main mission, their covert mission, is to enslave the American people, well, the world for that matter, because they have foreign arms, the IMF, the World Bank, foreign arms of the, this central banking cabal. That's actually, the head of it is in Basel, Switzerland. Headquarters of the US are in Washington, D.C., and Liberty Street, Bank of England in the UK. So let's have a look where the national debt of the United States was in 1913. And I've got figures from the treasurydirect.gov website. 1913. That's why 1913? Well, that's when the Federal Reserve Act was passed by Congress. Fed went into operation in 1914, of course, but the national debt was 204 $913.66 billion dollars. So $2.9 billion. So this is really interesting. So you look here at the inflation calculator, and this is from government statistics. So I would say this would be even higher, but I'm using this. It's still really high. So $2.9 billion in 1913 would be $73.83 billion today. But I've adjusted that for the growth in the population in the U.S. 1913, U.S. population 97,225,000. U.S. population today 327 million. And that corresponds to a growth of 3.37 times in population. And with that, I multiplied the 73.8 billion. And I get 249.46 billion. U.S. hadn't created the Federal Reserve if the Federal Reserve hadn't come into being, and things would have remained the same in the last 105 years prior to what the Fed was. We could say that the debt now should be around $250 billion. But no, it's 22 trillion. And that's not taking into consideration these missing 21 trillion, which will have to be, which is government is misplaced at. So government doesn't have that money. The taxpayer has to foot that bill. So if you add that, that's even worse. That's like a 43 trillion. And it's amazing, so that's the problem with the Federal Reserve. It allows the system to create a humongous amount of debts. But at the same time, the people at the Federal Reserve, they're not stupid. They know that it can't keep going in a straight line. They need corrections. And that's why we get the great corrections and resets, in the Dow Gold ratio. The first big one under the Federal Reserve regime was 1929 to 1933-34. Then the second one was 1966 to 1980. And I think we are ongoing the third one. We've been ongoing that since 2000. If you look at the Dow in terms of gold, at the time it was over 46, the Dow gold ratio. Now it's dropped to below 18. It has as recently been at 22. And I think this bounce, we got down to around 7 in 2011, but I think the bounce from 7 to 22 was just a correction in a bear market for the Dow gold ratio. And the Fed knows that if they want to stay in business, they need to let this thing correct. The only risk the Fed has, I would say, is that they've overdone it this time, and the crisis will be so bad that people will start questioning the Federal Reserve. Some people think that that's what Donald Trump's trying to do, to bring people into this paradigm, into thinking that the Federal Reserve has a lot of responsibility, and it does. But most people don't know. He tweeted the other day that the U.S. economy is fine. The only problem is the Federal Reserve. I would actually argue that that's a good point, because the economy itself, the labor force, the factories, the land, the mines, the infrastructure to some extent. I know U.S. infrastructure needs revamping. That's the real economy, like Trump said. That's what I think he meant. There's nothing wrong with that. The problem is the money. And who's in charge of the money? It's the Federal Reserve. So he might have a point there. Is he really looking maybe to put a stake at the heart of the Federal Reserve and destroy it? That would be great. So that's my view. The whole problem is the debt. Nothing's going to stop this correction, in my opinion, in the stock markets and all paper assets. And that's why I've been talking for the last, end of 2015, for the last 3 years in my videos about precious metals, and that you need that to protect yourself. It's not a trading instrument unless you want to trade it with the futures short term. That's a different game. But as monetary insurance, it does its job. And it's just like saving. And I've gone through some numbers this morning. And I was looking at it yesterday as well. And I've looked at the price of gold in pounds and in dollars. And I'll start with pounds for my UK viewers. And again, if you haven't bought precious metals, I have a promo code maneco64 at goldinvestments.co.uk. You can get 0.5% discount from buying gold and silver bullion. Gold Investments is arguably the oldest bullion dealer in the city of London. It's family run. It's been there since 1980, and I can vouch for them. You can try to buy from them from outside the UK as well. They'll ship anywhere. So I was looking here, and I've taken these numbers from the LBMA website. There's a lot wrong with the LBMA, right? But we'll take that as a benchmark price. End of 2015, the pound price of gold closed at 714.753. End of 2016, it closed at 937. End of last year, it closed at 959.86. And right now, from yesterday's fixing, was a half day AM fixing, the price of gold closed at 996.26. So gold is up almost 40% in 3 years in pounds. So that's 39.38. You might say, though, well, the dollar has gone up a lot against the pound. I should have kept dollars. Well, it has, but the dollar price of gold in that time has gone up 18.73%. So gold has outperformed, gold in pounds has outperformed, gold in dollars by 20.69%. So if you had held dollars, you wouldn't have done as well, because you know the dollar price of gold has also gone up. Granted, this year so far, gold is down 2.7% in dollar terms. The yesterday's fixing was 1261.25. 3 years ago, though, it settled at 1062.25, so it's up 18.73%. But it shows you how gold has performed its function for people here in the UK, and even in the US it's performed its function as being a stable currency. Well, as I said earlier, the debt is the problem, and in a debt-based system where money is debt, the only way to keep that money supply growing is to increase the amount of debt in the system. But the problem with that now is that in 08, the crisis of 08, forced the system, the banks, the politicians, to just create humongous amounts of debt to keep the system going, and it's become unsustainable, and that's why we're seeing everything implode right now, and I think it's going to keep imploding no matter what happens, no matter if President Trump gets another Fed chairman, no matter if there's a trade deal with China. This is not, it's unstoppable. It needs to correct. Not trying to be bar humbug on Christmas Day. It's just you know what I think is the honest truth of what's really happening. That you need to always have that monetary insurance. If you want to play the booms and busts, be my guest. You really need to be careful with that, though. If you enjoyed this video, make sure you hit the like button. If you haven't subscribed to the channel yet and you think you like the channel, hit the subscribe button. I wish you all a great Christmas Day if you celebrate Christmas. If not, have a great Tuesday. Yeah, and you can follow me also on Steemit, DTube, and on Twitter. I'll talk to you later. Take care. Bye.